technology is in freefall, down 4.5% this week, with a bearish trend. Regulatory risks are escalating. This is what every serious investor needs to know about technology right now. Stay with me. Welcome back, or welcome if you are new to Financial Market Oracle. This week, the overall market context is characterized by relatively normal conditions, with the VIX index at 18.4, indicating a moderate level of volatility. In this environment, the technology sector is worth examining closely, particularly given its recent performance relative to the broader S&P 500. As of now, the sector has underperformed, with the popular technology sector ETF trading at -4.5%. This underperformance is noteworthy and deserves attention from investors, as the technology sector is a significant component of the overall market. Given its influence on the broader market, understanding the dynamics at play in this sector is crucial for informed investment decisions. The technology sector's current standing presents an opportunity to reassess its position and potential for future growth. This is educational content, not financial advice, so it is essential to consider your own investment strategy and risk tolerance. Let us start with the technical picture and what the charts are telling us. The QQQ ETF, a proxy for the technology sector, has experienced a decline of 4.5% over the past week and 3.04% over the past month, indicating a clear downward momentum. The Relative Strength Index, or RSI, is currently reading 45, which implies that the sector is approaching oversold territory, but has not yet reached extremely oversold levels. This reading suggests a bearish signal, indicating that the downward trend may have further room to run. The trend direction and conviction are clearly to the downside, with key support levels likely existing at the recent consolidation zones. Resistance levels, on the other hand, may be found at the recent highs, which the sector has struggled to surpass. The current move does not appear to be a sustainable breakout, but rather an extended overreach to the downside, potentially due for a consolidation. A key technical setup to watch this week will be whether the sector can hold above the recent lows, or if it will break down further, leading to a potential retest of the support levels. Now let us look at the fundamental catalysts driving this sector. On the fundamental side, the technology sector is navigating a complex environment shaped by the current macro backdrop of normal conditions. The key stocks in this space, including AAPL, MSFT, and NVDA, have been responding to a combination of sector-specific catalysts and broader economic conditions. The longer-term structural story for technology remains compelling, but near-term headwinds from the macro environment require careful positioning. Institutional investors are clearly watching this sector closely, as evidenced by the flow data and options activity. The fundamental thesis here is about balancing near-term volatility against the longer-term growth trajectory of the sector. Next, let us talk about the specific risks you need to manage this week. Every investment opportunity comes with risk, and technology is no exception this week. The primary risks facing investors in this space include macro sensitivity to economic data releases, the potential for unexpected Federal Reserve commentary to shift the risk-off dynamic, and sector-specific execution risk from the major companies reporting this week. With the VIX at 18.4, the options market is pricing in a specific level of near-term volatility, and smart position sizing means respecting that implied move. A disciplined approach to risk management means defining your downside before entering any position, using stop-loss levels based on technical structure, not arbitrary dollar amounts. And now for the strategic outlook, where does technology stand heading into next week? In terms of strategic positioning for technology this week, the data points to a defensive and selective stance. The key theme to track is how institutional money flows respond to the macro data on deck. As always, nothing in this video is financial advice. Do your own research and manage your risk accordingly. If this analysis was helpful, please hit the like button and subscribe to Financial Market Oracle. Comment your technology watchlist below. I genuinely enjoy seeing what you are watching. Until next week, stay informed, stay disciplined, and stay profitable. Cheers! This video is for educational and entertainment purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. Past performance is not indicative of future results.